Hello, good morning, investors and corporate. Welcome to SET Digital Roadshow Year-End 2023 Performance Review. This section will run about 45 minutes, including Q&A. Company will start the section by 30-minute presentation, followed by 15-minute Q&A. And during Q&A, investors may review questions in meeting room chat box or use raise your hand function. We will open your microphone so you can ask the question to the company directly. So may I now invite NR Instant Produce Public Company Limited to start the presentation. Thank you.
Hi, Sawasdee krab. Good morning, good evening if you're not in the Asian time zone. So this is NRF quarter 4 and full year 2024 review, digital roadshow. So today we're going to cover 23 in review. We'll then do an update by segment, as well as go into in-depth around our strategy of what we call bamboo, a financial review, and then outlook and guidance. So this is the 2023 year in review, and this is a picture actually of our distribution center that we recently acquired in London back in August of 2023. So as you can see here in 2023, we actually spent a lot of the year focusing on vertical integration. So basically farm, factory, and omni-channel retail. As you can see here from our revenue composition, ethnic foods has dropped to 63% of revenue. Plant-based foods still represents 7% of revenue. And then you can see here, omni-channel Asian grocery now has increased to 16% of revenue. We just slightly missed our mark of 3 billion baht, or 30% growth. And this is largely because of orders that failed to come in from our Sriracha business. I'll talk a little bit more about that later. In terms of geographic revenue distribution, Europe still represents 1/3, America 1/3, and then the rest of the world 1/3. As we continue to expand upon our Asian omni-channel retail strategy, what you're going to probably see is an increase in terms of revenue from this region, at least for the next 12 months. In 2022 to 23, if we looked at revenue, what you'll notice is, well, let me talk about pet food. So pet food increased to basically we're now in full production capacity in our line 1, and then we're just expanding our line, and we'll talk more about this later. In terms of revenue, it came slightly flat, and the reason is, and this was discussed in the first half of last year. In the first half of 23, our mainstream customers, mainstream being the Tesco's and the Aldi's of the world, had were slightly surplus in terms of the inventory they were holding. And then as soon as they sold down inventory in the first half of the year, the second half of the year, the orders came back. And so actually on a year-on-year basis for the second half of 23, we're actually up versus 22. So basically we're flat for the year. From an EBITDA perspective, I'd like to speak more about that in the next slide. And there was a drop just due to various impairments that we had over the year that were one-off impairments. But you can see here, pet food EBITDA increase proportionate to revenue increase. From e-commerce and grocery, you'll notice that revenue fell slightly, but EBITDA increased in terms of e-commerce. And the reason is one of our subsidiary companies, we are no longer consolidating because we're actually planning to spin it off. And so another listed company increased capital into that company. It was a supplements multi-level marketing company here in Thailand. So revenue fell, but EBITDA increased. And then in terms of grocery, we only consolidated 1 quarter technically. So you can see here, 1 quarter's worth of revenue was around $10 million with around 9% EBITDA margin. So if we look at 23, I think we accomplished to the extent of what we really wanted to. So in the beginning of the year, together with our board and a leading consulting firm, we built a roadmap from 23 to 25 in terms of what we wanted to do. And that is to be more focused on product, production, and basically omni-channel retail. So very simple business model, right? So we have farms, we have food production, and then we have retail sale of Asian foods. The key strategy is basically number 1, strengthening our core food business. Number 2, securing our future, which basically means to continue to invest in decarbonization to reach net zero. Number 3, to unlock value. So we spent 5 years investing into actually all of these, and now we're basically to harvest mode. So we've got 2 IPOs in this year, as well as divestment liquidity plans, which will boost both our equity asset and liquidity in this year. So things are looking really good, as well as laying the foundations of competitive advantages specifically around our organization. So across our 3 segments over the year, we focused on basically strengthening our core food business, which is basically building out our Asian grocery omni-channel. So we produce 3,000 SKUs across sauce, condiments, and we believe that Asian groceries is where we primarily sell these products. By owning this channel, it serves as a good channel base for our products. We focus on product development within ethnic foods, as well as we continue to build out our plant-based production capacity. And then we restructured all of this under one holding company called Bamboo for an IPO. And then in terms of, sorry, so let me run through the animation. So in 23, just a recap of the key things that had happened in the year. So on strengthening our core business, we did 3 things. So number 1 is we invested 130 million baht to increase our pet food production to 4,000 tons per month. We invested into a new sauce factory of 200 million baht that will increase our production capacity to 2,000 tons per month or 24,000 tons per year. And then we announced a joint venture with one of the most successful entrepreneurs in Thailand. He's a branding guy, a marketing guru, and that's to launch a new line of sriracha sauces in the United States. In terms of our direct-to-consumer segment, we acquired 1 Asian grocery, 1 supermarket, a cash and carry in London, and then we signed an agreement to acquire a successful mobile Asian grocery delivery app in the UK. And then in terms of, on the climate side, we acquired the assets of the Very Good Food Company, which was previously worth $300 million, and we acquired it for less than $100,000 US. In terms of seeding new businesses, I'll talk more about this later, but our plant-based food facility is now up and running with BRC grade A. And then in terms of liquidity, so we're preparing to file for an IPO for our pet food business at the end of 2025, as well as prepare for an IPO of Bamboo Mart, which is what I discussed earlier. And I'll talk more about this in the next slide. As part of our divestment strategy, one of our subsidiary companies, we did a share swap with our pharmaceutical chain. So we now own 40% in this pharmaceutical chain that does around $16 or $17 million in revenue here in Thailand, and they are preparing for an IPO later this year as well. On the rest is really around building our core team. So let me talk about our pending IPO, which we're targeting Q4 this year, slightly delayed by about 6 months. So what we did was we organized our businesses, which comprised of our plant-based business, our e-commerce business, and basically our Asian grocery business under one umbrella called Bamboo. And this basically resulted due to this restructuring in one-time impairment because we closed our plant in the UK and then we moved all the business into Thailand, as well as one-time equity restructuring and IPO-related fees, because we spent fees with regards to legal and financial advisory in preparation for the IPO. Currently, Bamboo, on a trailing basis, does around 2 billion baht in revenue. Our IPO timeline is slated for December of 24. In terms of IPO valuation, you can see here our peers are trading at around 2 times revenue trailing. Okay, so our revenue on a trailing basis is 2 billion. Because we plan to list in December, we should be able to get 12 months forward revenue. Basically, so 2025 management forward revenue guidance. And so for the year 2024, we expect probably 30% growth in this area. And for the following year, probably another 30% growth. And so you can kind of do the math to figure out what the IPO would trade at in in the year end. And this would benefit us both from a increase in our asset value, one-time gain from a P&L perspective, as well as improvement in equity as well. So in terms of a quick review of the year by segment, and as mentioned, right, so we're we're trying to simplify our story for investors to understand. So we have farming, we have manufacturing of Asian products, as you can see here, and then we have retail of Asian products abroad. It's very similar to many companies where they have manufacturing, and then, for example, they have grocery, and then they have cash and carry in Thailand. The only difference to our story is that we are building this retail channel overseas. So very quickly, in 23, our sauce factory was complete and now in production in Q1 of 24. As mentioned in 23, we had a first half slowdown, but then we have a second half recovery with year-on-year growth. We slightly missed our revenue targets in ethnic foods because when Hui Fung came into the market, so Hui Fung being the dominant US sriracha company, it basically slowed down all orders of sriracha. And although we have been preparing for this, what we didn't expect is consumer brand loyalty to the brand of Hui Fung. We had thought that because their formulation had changed, that there would actually be a drop in demand. But actually what Hui Fung did is they came back onto market. Consumers still bought into the brand, but what they did was aggressive price cutting. So we do believe that in 24, with our joint venture and our new branded products going into the market, we will slightly be targeting the higher end of the market versus like the mass end of the market with Hui Fung. So we're still quite hopeful on this. What our new sauce factory will do is that we're gonna it's BOI. So basically we've got tax incentives up to our investment amount. And so for 24, we're gonna have a huge focus on sauce. And by increasing capacity, we're going to move some sauce production from our other factories to this factory. So we'll have better yield improvement as well as gross profit improvement, because this factory is automated versus our other factories, which was basically semi-automated and more skilled labor. And that will allow our other factories to use that capacity for other products that we have in our pipeline. For pet food, year in review, I think was very successful. So as you can see here, we increased revenue from 127 million baht in 22, and we quadrupled it almost in 23. We're now operating at almost 100% production capacity in our first line production. Our second line production capacity should start in May. So that brings our production capacity from 1,800,000 tons per month to 4,000 tons per month. We expect average yield for the year to be 60%. So in other words, we expect revenue growth here of probably if you do the math, it should come out less similar growth trajectory, but a little less than what we experienced in 22, but at a higher scale. At this higher scale, our gross profit margins will improve as well as our net profit, as well as EBITDA margins. Average gross profit margins in pet food is around 25%, and then with EBITDA around 15%. In Asian grocery, although we were only able to consolidate, as you can see here, 1 quarter's worth of revenue, I'd like to talk about historically how they have done relative to 23. As you can see here, Galilean over 22 had 17 million pounds in sales, and then they grew to 21 million pounds in sales in 23. We expect that growth to continue into 24, all based on organic growth. You're going to see here margins are around a little under 20, or a little under 30%. We expect these margins to slightly improve to around 30%, and then for grocery to maintain around 37%. So at the year end, we wound up with 2 branches. Just for reference, if you decide to financial model this out, 1 cash and carry. So cash and carry is a larger footprint grocery store, 2,000 to 5,000 square meters, can do about, at the very minimum, around £1 million per month in revenue. A grocery store, which is around 300 to 500 square meters, which is inside the city, should do somewhere between 300 to 500,000 pounds per month in revenue. And those are the gross profit margins on average we expect to achieve. On plant-based, so we weren't able to open branches that we expected, but we do expect to open new branches in 24. And then that's on our plant-based cafe. And then in terms of our plant-based factory, it just commissioned. We got one of the highest marks, and we are now the only plant-based OEM manufacturing plant in Asia Pacific, plant-based certified. And so we're pretty positive in its trajectory for the year. This is a joint venture with PDT Group. So I want to talk about bamboo, and this is a strategy that we had embarked upon last year. And really it's around sourcing Asian products from Asia, all across Asia, and then selling it into Asian grocery supermarkets, starting in the UK and then eventually the rest of the world. And it's a strategy that's also has a lot of synergies with our manufacturing capabilities. And so our target is to achieve 10% of the revenue from our retail to be derived from products that we manufacture. So how did we kind of arrive on this strategy? Just for a quick recap, right? So it's all about solving pain points. You know, historically, we produced ethnic foods, and that was around solving pain points for overseas Asians who still wanted to eat Asian foods. We got into plant-based by solving the pain points for our supermarket customers who said that we should get into ethical and sustainable food manufacturing. And there's a huge demand for that. In 2020, we went into e-commerce to solve our own pain points because we didn't know who our customers were, and we had 0 sales in e-commerce. And we wanted to get into, we wanted to increase a channel in e-commerce. In 21, we announced that we wanted to decarbonize the company and then achieve net zero by 2030. And that was really around solving also supermarket pain points. As you know, most Western supermarkets now have adopted goals of net zero by 2050, and then some supermarkets have adopted net zero goals of 2030. And so by aligning our net zero goals together with our supermarket customers, hopefully we would take priority on shelf. And then in 23, we announced our Asian UK supermarket strategy. And that really was solving our own pain point as an exporter of ethnic foods or Asian foods. And that is the ethnic supermarket globally is around 50 billion a year, growing at 10% CAGR. It's hyper fragmented around the world. It's huge. It's like the world before Walmart, the world before 7-Eleven. It's a massive opportunity for us to go in there and consolidate the industry and create scale. And these are pain points that we have faced as exporters. There is no scaled partner who is sophisticated with data feedback that allows us to know our customer and improve our products. And so in 24, really what we're focusing now is, now that we've got supermarket exposure and a footprint in the UK, is solving the pain point of our supermarket customers. And that is basically, how can they also shop and enjoy Asian foods while not being able to physically come into the stores? And that's through our Bamboo app. And so in summary, our value chain basically is NRF manufacturing. We've got our cash and carries that serve as our distribution center, as well as wholesale trading arm. And these cash and carries fulfill our Bamboo stores, which are smaller outlets within the city. And then we have an application, which I'll talk about in a moment, that basically does last mile delivery. So nothing new here, but it's something new within the context of Asian grocery. So we signed a deal in October to acquire a very successful app. So basically what they were doing is they had open dark stores and they were delivering Asian groceries to customers in the UK. That's the addressable market in the UK. So every dark store was able to achieve £2.4 million in revenue. At the moment, our goals for 24 to 25 is to be the biggest retail chain in London. We actually now have term sheets in place to acquire or to build Bamboo stores that would cover most of central London, and this would cover both retail, wholesale, as well as app delivery. And the advantage we have versus the previous startup is that we don't need to build dark stores. So there's no warehousing, right? Because each of our grocery stores, our cash and carry, serves as warehousing for delivery. So our goal is to be the biggest in London, to have 10 to 15 stores covering London. Actually, with the term sheets that we have already signed, we could do that this year. But then again, we have to see whether, what comes up in due diligence, etc. Our next goal is to drive 10% of revenue by products that we manufacture or our own NRF branded products. We have term sheets and deal for 12 stores. Right now we're working with the eFresh team to integrate and then transition the code and the software over to us, and we hope to launch this summer. What's really nice about this is that for example, if our existing stores are doing, say, for example, $1 million in turnover per month, we hope to add probably another 20% in revenue on top of that through mobile delivery. So now quickly, because we've got limited time, just going to financial review. I'll talk quickly. I spoke about revenue. So we just slightly missed our 30% growth target for the year. From an operating perspective, as you can see here, our segment has slightly changed. As you can see here, and I spoke about this already. On a quarter-on-quarter basis, on a year-on-year basis, we grew just shy of our 30% target. On a quarter-on-quarter basis, we grew 82%. And because retail has such volume, what you're going to see is an escalation and aggressive growth in terms of our revenue as we continue to push our omni-channel strategy. I'm going to run through this, and then I'll leave the EBITDA part for our group CFO. You're going to notice a slight change in the composition of our gross profit margin. So it's not like it declined on a revenue basis, but as a percentage of revenue, it's going to change, and that's because pet food has got it's got a lower gross profit margin profile of 20+% versus like retail, which is like 38%, and manufacturing, which is 30 to 35% revenue. So as our retail revenue continues to increase, this gross profit as a percent of revenue will change as well. In terms of SG&A, it did increase on a quarter-and-quarter basis by 27%. and on a year-on-year basis by almost 100 million. I'm just gonna have our CFO just briefly talk about this.
Thank you, India. For the SG&A for this quarter, you see that is increased from the 27% on compared with last year. This one is a full record in the supermarket, for the fourth quarter. That's why it jumped up for the SG&A. And then the same thing with the year end compared with the last year. This is because of the new business for us.
We did have a significant amount of SG&A in terms of restructuring the group, divesting non-core, anything that doesn't relate to manufacturing ethnic food and sale of ethnic foods, as well as the one-time impairments, including we took a $1 million write-down of our partnership in Canada with a company called Fluid Energy. And we're going to seek legal remedies now against Fluid Energy, which we expect to recover probably depending on how long the lawsuits take. EBITDA.
EBITDA, okay. For this one, you can see that EBITDA is a decrease from 24% to 11% for this year because we do have the impact of the investment put in this EBITDA. But if you take out for the impairment the impairment loss and then the legal consultant fee from the investment, EBITDA for this year is increased from the last year by 15%.
And what is the normalized EBITDA would increase by how much?
From normalized from 398 to 462, it's been increased by 16%.
How much? It will increase like around 160 million baht in EBITDA if we were to reverse the one-time expenses.
Yep.
On a net profit perspective, it's the same. So it's basically the same issues, but the net profit, if we normalize it, would increase by how much?
No, it's slightly decreased from the last year. Okay, from the 93 million from the last year, the normalized profit to this year 79 million, but it's had the profit, not the loss.
Yeah. So essentially, yeah, if we normalize it back out, then we would add back. We would actually be profitable. I just want to quickly before we just go on. I just want to spend a little bit of time on guidance. So this year we're forecasting conservatively 30% revenue growth, driven by our bamboo strategy. So our retail Asian grocery omnichannel grocery strategy, NRF branded sales, pet food, and from a net profit perspective, we're targeting 6 to 9% of revenue, driven by core earnings, synergy from our bamboo strategy, as well as trying to contain SG&A to sub 29%. Just due to the nature of our the bamboo strategy, another goal is to improve return on invested capital to over 12.5%, and this is mainly by maximizing utilization of our manufacturing assets as well as our retail assets, using less leverage, and then working with an ecosystem of partners to basically drive revenue from these assets. So if we look at the assets, right, in 23 we had 4 factories, 1 joint venture, which is a plant-based. By 2025, in terms of factories, we should still have 4, but then we might have 1 additional joint venture factory, which we hope would add to our capability in terms of what the type of products that we can manufacture, as well as sell into our retail chains. And I would say that this is nothing new. I mean, a lot of big groups employ the strategy. We're probably just the first group to basically venture into overseas Asian ethnic grocery. So as you can see here, we ended the year with 1 cash and carry and 1 grocery. By 2025, we hope to end the year with 3 to 4 cash and carries, and then 10 to 13 retail, just within London itself. With our unlock value strategy, within this year, we're looking at returning our debt to equity to sub 1. I believe that in the next quarter, we should be able to do that, and then as well as reduce our debt to EBITDA down to sub 4 as well. So there's a few things that are happening now which I can't really elaborate on. So as I mentioned, like we have 2 IPOs and we have divestments of non-core. Non-core being anything that doesn't have to do with farms, ethnic food manufacturing, as well as ethnic food retail or Asian omni grocery.
The session has come to an end. So on behalf of the Stock Exchange of Thailand, I would like to thank you investors and corporate for joining the conference. We look forward to welcome you all again in the next quarter. Thank you very much and have a good day. ขอบคุณค่ะ
Uh,
Yeah,
Thank
it's
you.
a big-
Thank you.
Thank you.